Hello and welcome. In an industry where people holding borderline technical analysis skills lose in the market, I have found a system designed where skills needed is just above basic math and computer literacy. Spelling literacy is not required, and I think I spelled literacy wrong. I think it's just one C, but I'm not 100% sure. So I intentionally spelled it to the 1 or 2% unlikelihood because I don't need to know my spelling to do this trading. 1 minute a day to see if it works needs to be done in 5 to 10 if some is needing, making me very proud to have been able to come up with a strategy of this type of magnitude. And when I, of course, say winning, I'm going to refer to people trading in technical analysis markets in which the market actually doesn't go down. So if they're day trading when market conditions go barely down, sideways, or up and they still lose, then yeah, that's what I'm referring to there. Because this, of course, still has the risk of the markets going down. But the risk reward venture of when they do go up, when they actually go down at times as well, is magnificent. And the prerequisites for the ratio trading, again, must be math and computer literate. You have to have the coins for each ratio cross. And again, I don't think that literate's spelled correct because it's not needed to be spelling, but you have to have the coins. So you don't have them, you buy them, you start. You find the ratio from the get go. But you have to understand how wallets work and then set them up. So if you're trading Theta, how your Theta wallet works. Litecoin, and teaching when I teach anybody private keys, that's 100%. If you want to keep them on the exchange, it's your choice. But for me, I would rather have the private keys. Have a working Binance account, and I understand. Well, I'm trading DGB in this, and it's not on there, and I want to trade it here, or I'm in the states, and I'm gonna okay, yeah, it'll work on the other exchanges. I mean, that's not like it matters, but Binance does make it a lot easier. Ledger results. Game plan is done. So, how are you going to write down your trades? Are you going to use a spreadsheet? Are you going to write in a book? Are you going to use a phone, a gadget, this or this or that? That's so you know. Okay, I got this written down here. All those types of things. Know when and how to trade in all the normal common situations. And well, you use the video game that I made to do that. Now, dartboard rallies. For now, you're fine, I think, within it, but it's very important, I think, to understand how to play it. A dartboard rally is when all mark. Well, in this case, when it's not for the ratio trade, it's when both of your associated coins go up nicely against Bitcoin over a good period time frame. That's what a dartboard rally is as far as the ratio trading is concerned. It's those two coins together. If one's doing individual up and down moves, then the ratio game is designed to work wonders for you as it is. And you just keep doing your thing that you were playing in the video game. The next screen is going to have much smaller size of fonts. A lot more stuff is written. But I want to go through as many of the early steps I can for people that are that really are at the most introductory steps that I can think of. Number one is get cryptos. If you don't have Bitcoin, you're going to have to learn how to get Bitcoin. You're going to have to learn about the blockchain, how it works, and try to find your transaction IDs at times. Understand the best you can. Look at like day after day, week after week. Look at them. See what the in block numbers mean, and well, more importantly, like your confirmations, all of those early things. Understand what it means when you're putting funds on the blockchain. You have a good understanding of what that means. Learn about the wallets, the private keys, and think in strategy how you're going to protect and access those accounts, those wallets. Learn about Bitcoin and take some time to really understand what decentralization really means, as well as centralization. and all of the different aspects that you have been worked that you've had in the past with both cases in whichever forms, realizing with banks and any different things and stuff like that. Register Binance, and then again, another site is fine, but Binance I highly suggest over other ones. And play around with the site, learn the bid ask system, how it works, how the save withdraw addresses come into play. Because what they have on there is if you withdraw coins to an address, you can save it and give it a label. This way you can give, and you can give like the same coin. Like you could have like 4 or 5 different addresses for one coin. You give each a different label based on how you want to send it. And this way, instead of always going to where like maybe one of your wallet to find your public key, it'll always be safe for you too if you're always sending Litecoin to the same place, kind of deal. So that's a pretty cool thing. But just learn whatever things you can to just so you're familiar with the exchange. Understand why the math to my strategy kicks ass on flipping coins back and forth and why you need not predict the short term movements. And next one, find 2 coins to dance with that are winners. And that's my weakness is the two that I think are winners, but I think I'm managing pretty well right now. And I can give you my suggestions. Of course, I've done so with coins like the Theta and the Litecoin, and there's still a whole bunch of others. I like Ripple and I like Qtum, and there's like a well, all the coins I've been playing. A lot of them are funny play coins. Like so, don't look too much into stuff like the ones that are the low value. Even Go Chain, considering but I like its volatility. Those are just play arounds with what coins I suspect can have high volatility. That's all that is, and coins, of course, that I can protect really well. But there's a good list of like 5, 6, 7 different coins that I really do like, and of course, Theta Litecoin is my favorite pairing. And download Small Basic and spend over 10 hours of time. I mean, once you get to 20, if you get to 20, 30, 40, you're probably gonna overdo it. And I only got so many pairs you can start with, but I got good over 20, 30 right now. And if you really want some extra ones, hey, I mean, this is what I've got, or even how do I get into it? Let me know. I can come across with a decent amount of pairs to get you started, and this way it'll let you experience and find strategies for when to sell, how much, and seeing how there are about a dozen or so different common situations worth getting an experience on. Situations like a coin just continuously goes straight up like 9, 10, 20, 50, 60x move. Just a phenomenal move. How do you handle that? You get 12 out of 14 sell orders in a row. How do you handle that? 5 sell orders in a row. How do you play the back and forth choppy action? Uh, Different things like, or even the small different subtle different things like when you are coming off of just grinding small gains higher, then you get a 30% gains. Just how you lead into that. And then speaking of gains, what happens when you get a 30% gain versus a 50% or a 70% move on a cross pairing? Those are the different things that are worth doing. And then you can see, oh my goodness, I didn't do so well doing this. Or what happens if I try doing this? Or go for higher, lower volatility this way. If I see what results there, and you try it over different so many combinations, and you can see, wow, this one looks very good if I go this strategy. And that helps build your experience and helps understand to give you the better return on investment that the math probability odds that can give towards you. You can understand different levels of your risk reward, realizing that if you're if you're going for extra gains, you're going to have to put up larger amounts at different times. And how do you handle situations where I like to call it you sell out, or you at least you oversell, which is the opposite of what I call short selling, meaning you sell way too many at one time and the thing keeps going up on you. How do you handle those situations? Things like that to get experienced with. And then the bottom one, learn how to play dartboard rallies, and my game will not help you there at all. I'll be there when the next one arises, but until then, stay the course. And when I say that, I mean, of course, people that I'm talking with, when the time happens, I'll basically let you know. Because generally speaking, when a normal dartboard rally happens in the market, you're going to have it with yours as well. And as far as YouTube's concerned, I've been talking about that for quite some time. I think one will be coming, and I do think it will. But until it does, they're not there, and you can't trade what isn't there. Meaning you can't trade for a situation until that situation rises. Now, there's three ways of a dartboard rally. Whether we'll ever get all of them in time, because I don't think we've ever gotten them in the three scenarios. But the three scenarios are: you get a big move, and either Bitcoin does one of three things. It either goes up, stays around the same price, or it goes down. If it goes up, that would be very esque like of 2017, and that's very good for your portfolio. And what you're going to have happen is lower volatility over the long run against your altcoins together than you would against Bitcoin, or you'd be selling a lot less in sort of esquent sense. But the value of your coins are going to go up against two different commodities. They're going to go up against Bitcoin and they're going to go up against fiat currency. So that's where you're going to really have to manage upon that situation. So when they're up against the fiat currency, that's when you talk about portfolio profit taking and how you adjust your ratios to do such, which is really just sell bits of both pieces. Making trades against Bitcoin because they're way up against Bitcoin and you want to protect them against the Bitcoin declines on both ends. And then, of course, selling that against the dollar as well, and then maybe buying them back against the dollar as well, because they can have even more vicious declines against the dollar on the way down. And that's when they go up. Now, when Bitcoin prices remain sideways and they're all going up together, your portfolio is going to go up as well, but not as good as it would in the first case because the amount of each altcoin you have is going higher and they'd be going higher in price against the dollar. But in this case here, you have the same sort of lot of similarities, but it's more important in this case to really protect your funds, I think, against the price of Bitcoin. And the same thing if Bitcoin is going down. Maybe your portfolio isn't having any gains or very little gains or microscopic losses because of it. So you have more coins, but you might see Bitcoin's down 40%, altcoin A is down 10%, and altcoin B is down 15%, and even maybe bigger than that. Like seven, I mean, that's never happened as far as I've known, but technically, mathematically, it can, or at least that's because I'm talking about when markets go up against Bitcoin. It's just when that's happened, really the only two situations I've seen is the first two. So generally speaking, what's going to happen is you're going to have some spectacular gains. You're in this business, of course, to make money and to increase your portfolio. And to protect your portfolio when it's at very high levels, to me, I think is just a very smart, responsible thing to do. Okay, thank you for tuning in. Have yourself a great day. Bye bye.